All right, so we're going to be talking about the best way to use Fibonacci and the way that I personally use Fibonacci in regards to nailing down entries, getting more precise, all that good stuff. All right, so I got a chart of GBP USD right here. So we're just going to use this for the sake of this example because I don't have any personal trades to break down today. So we got to work with what we got here. So GBP USD, what are we looking at here? Well, in this example, we're looking at a selling scenario, meaning I think GBP USD is going to be seeing lower prices here pretty soon. I am short-term bearish on this. I think we're going to take out those relative equal lows on the 4-hour chart. So down here, so we're looking at this from a bear's point of view. And so how do I use Fibonacci? How do I use Fibonacci to nail down my entries, to get more precise with it, right? So we're going to take this right here. Again, we got to work with what we got here. I like to trade within kill zones. This is not within a kill zone, but just for the sake of this example, we're going to use this price range right here because it's a similar example as I would use if it was like within a kill zone. So right here, see this price range? Many times what I will do is when it's in a kill zone, I have my bias lining up. I have a shift in market structure, which is key. A shift in market structure. I have a fair value gap. I have everything lining up. It's taking liquidity. I have everything lining up, and I have what we would call an impulse move to the upside or to the downside, depending on whether I am buying or I'm shorting. So in this case, we're shorting. What I'll do is I will take the high of the impulse move if I'm shorting to the low from where price trades to, and we find this price range, right? If I want an entry and I'm shorting, I want to get short on the retracement higher. I don't want to chase this lower, okay? I'm not breakout trading, not breakdown trading. I want a retracement higher back up within that range to get a better entry, to get a better price. So where is that price going to be? My key Fibonacci retracement, in my opinion, the absolute best point to get a entry using Fibonacci is 61%. 61% is that money shot. That's what I like to hit. And so that's what I like. So for example, price you see retraced higher right here. It retraced higher within this range and smacked 61%. That would be a possible entry point right there. Okay. Now, clearly there are other things that need to be lining up. I don't just slap a Fibonacci on some random price range. I am for this example because it's just that it's an example, but I need other things lining up whenever I am doing it real time. Like I need it in my kill zone. I need my bias lining up. I need it taking liquidity beforehand. I need the shift in structure, strong shift, high probability shift, aka a fair value gap created. So I need multiple things lining up here. So I don't want to like give off the impression that a Fibonacci is all I use. It's not. But I do use it to get more precise, to get a better entry, because many times it will retrace and hit 61%. And that's what I wait for, okay? Because we don't want to get FOMO. Again, we don't want to get FOMO and chase price as it's trending lower here. We don't want to get antsy. We don't want to get needy. Nope, we're professional. We're patient. We sit on our hands and we wait for the best entry that we can get, right? Where's that best entry? It's up into 61%, key Fibonacci retracement. That would be a good place to go short right there. Okay, you can risk, a good place to risk would be the high of that price swing. So you could put like your stop right above the high right there. At that point, if it was to crack higher, your analysis would be wrong. And yeah, you could, as for targeting, that's really up to you and your personal preference, how you want to do it. If you're a scalper, you could be very conservative, take that low hanging fruit and just target this low right here. Or if you want to be a bit more aggressive, maybe you want to tag some liquidity a little bit farther out. So for example, we have a larger liquidity pool down here. See this? It's a larger liquidity pool. Maybe you want to be more aggressive and tag that, which I do think that's where we are headed next. Again, relative equal lows, which we're not to get too sidetracked here. But that's what it is. 61% of that price range is where I like to get my entries on the Fibonacci. Okay, and again, any of you guys that are wondering, like, what about all the other stuff? If it's not the only thing you use, what else do we use? Well, you need to watch my market structure series. So if you go to playlist on my channel, you'll see that there's a series called Market Structure Series. I need you to watch that entire series. It's very important. I need you to watch the SMC series, particularly fair value gaps. You need to have a firm understanding of fair value gaps, very important. And you need to understand where liquidity is. So you need to understand where your key liquidity pools are, which I've made videos on that. I've made blog posts on that. Everything that you can think about in regards to my trading, how I trade, I've done videos on it. I've done blog posts on it. It's just up to you to want it bad enough to go study it. I have all the info out there. It's all out there. You just gotta go dig into it, right? So, but that's how I like to use it. 61% is key Fibonacci retracement that I personally like to use to get my entries at. Again, it's not something you want to just use as a standalone. All right, I know I'm beating it through your head because I don't want the takeaway from this video from even one person to be that Fibonacci is all you need. All right, so I don't want people just taking random price ranges and then going short as something hits 61%, risking the high. I don't recommend that. That isn't, I don't believe, would be an effective way of trading. You need other components lining up with it to give you a more well-rounded analysis. So I don't want to give off that impression. I don't want anybody to go in their charts doing that. But Fibonacci, when used in conjunction with other factors, is a very powerful tool in regards to timing, to getting a better entry, to minimizing your risk a bit more. So if you enjoyed this video, make sure you leave a like, you subscribe for more content, and I'll keep it coming.